Hello, everybody, and welcome back to the Trader's Mind Chat Show. I'm Mike, and I'm joined with Stu again. Welcome back, Stu.
Hi, Mike. Glad to be here. Thank you. Hi, everybody.
Well, we were just talking a little bit before the show started about this new scan that that you were developing. It's called the sit on your hand scan.
That's the one. Yeah, the chill out, take it easy scan.
Yeah. So, well, we've got a lot to talk about today, and I think a good theme, especially when the market is where it's at, will be patience. We do have a few trades to talk about. I've got a few open trades. Stu has a few open trades. A few of them that, if you guys were here last week, just recently started. So as we're going through all this stuff, and if you have questions now, I see somebody already typing into the chat. Oh, Caleb, welcome to the live stream. Good to see you. Yeah, as we're going along, if you have comments, if you have questions, like go ahead, put them in. Well, we're here to help. We're here to serve. So let's jump into the charts. Let's see. Well, what do we got up here first? All right. Looks like you're up first. We've got some PayPal here.
Yeah.
Remind us here. Well, what was the idea?
Well, I talked about this one last week. Actually, it was one of the ideas, and I saw it as a range trade from its long-term support at 103-ish, or there or thereabouts.
Let's zoom out. See, from around going all the way back here.
Yeah, and then I was looking at that, and then sure enough, the very next day, it kind of popped up. So I bought the opening range highs at 103.60, and I've been in it ever since. It's took a scale out at $112, so $9 up. Tightened my stop up last night because it was a kind of down day yesterday. Still in it, still hanging in there. So it's been a nice little mover actually. It's gone 15% or something in a few days. So it's okay.
No, a lot of people when you have these kind of range bound trades where you have some potential overhead from back here, and it's even more significant as you zoom out to these levels. I used to be the kind of guy, and anybody else that's here that's watching, let me know if you've run into this problem too. So I used to see getting close and be watching the ticks and be like, oh man, I'm wondering if if it's just going to roll over, and then you see a day like this where it pulls back just a little bit, or even earlier today, right? If we go into and I would be guilty of this too, like going into an intraday chart and trying to see where how things are moving, and I would just be freaked out by a move like that when you'd be getting so close to a potential major overhead supply. Well, would you mind talking us through how you're mentally managing this, or what you're doing, or if you're in front of the screens or looking at any of this stuff, like maybe the part is
I guess I'll get out of this trade when it closes below the 10 period moving average.
Okay, so let's go back to the daily.
Yeah, on the daily. I got in on the daily, I'll get out on the daily. But in the meantime, it's starting to move a little bit sideways, and that's fine. So I've just moved my stop to what seems an appropriate level to lock in as much as I can. Hopefully, I'll just keep keep moving up. So I'm not overly worried about the overhead resistance. I kind of expect it to test that and come down again a little bit. That would be normal action.
Mhm.
And we'll just see what it gives me. I'll just hang in there. I've taken some money out of this trade. When it touches, I was targeting a level of 124 bucks. So if it touches 124, I'll take a second scale out. I'll take another third off of that, or a third remaining off of that. So I've still got 2/3 of my position on.
Mhm.
And then I just kind of leave it from there on in, and we'll just let the market take me out. But I always come out either on a backstop or a trailing stop. So that would be, I'm not going to try and anticipate what might happen, because whenever I've tried to do that, I've got out either too early and watched it go without me or whatever. So I'll just sit with it.
Yeah, it's a good theme. Like just like how we mentioned at the beginning, like a good theme is patience
Yeah,
and letting yeah, it's a solid trend.
yeah.
Um,
Trust the system as well. So. Um, and certainly range trades like this. I mean, I was um, kind of cut my teeth with trading on the London markets, and there's an awful lot of ranging stocks on the London market, so they're kind of used to those moving between those points. But an interesting thing is I've got a little rule, a 5-day rule, that
mm,
um, when you're range trading, you from the low point, then count 5 days, then you enter. If you look at my entry, that was 5 days from the low.
so
So
one,
that's,
two, three, four, five. Yeah,
yeah,
perfectly right there, and then boop, there
yep.
you go.
And the same at the top. If it touches the top of that range, I think the one further up would be more likely to be the one that's in play, the one at about 185. Um, but you expect it to touch that. Then when it makes a little high there, don't enter within the next 5 days, and then pick your entry at that point. And that
Mm,
kind of rules out a lot of those false choppy breakouts. It's just a rule that I use for myself.
hmm. Is there anything else that might get you out down here? Like you had mentioned the 10-period moving average. Is there anything else that might get you to cut it earlier if it starts to
Well,
chop or move downwards? Like it's
um,
fairly close, but
it's close, but not really. What I do is, if I see any of my kind of danger signals that I use, then I'll tighten the backstop up to,
mhm,
to pull me out. But I wouldn't exit just because something looked a little bit weak on it on any particular day. But what that would do is allow me to tighten up that backstop, particularly if I'd been in it longer. I mean, this is a young trade. It's only 4 days old, or this is day 5 of it. So, but if it's something that had moved up 25-30% or something, then we'd be looking at tightening up those backstops, just particularly if I was extended above my 10-period moving average. So, but
mhm.
still giving the trade some room to move.
Caleb is writing into the chat that he bought PayPal after hours, right after earnings, and rather than cutting the losses, he wrote it down.
Ouch.
And yeah, thought he was buying the dip, and the dip kept on dipping.
Yeah, yeah, that was a big move. 50% or 45%. Yeah. Ouch.
Yeah, it speaks to like the so I've been guilty of all this kind of stuff too. Like back in the day, it you know it's painful to cut a loss, like especially like this, especially when you're caught off guard, and part of it is like you end up having to admit that you were wrong, and it's almost like you're like it, saying that there's like I'm just like going back and trying to think of like the mindset back then. Like it was just like kind of hoping that like things would turn around, and I would be like, no, like I've got to hang on to hope, and I would start to see like a little bit of an upswing in the middle of the day, and start to think that yeah, like here we go, and then the next day, yeah, you're undercutting that, and then at some point it rallied off of that, and it's that kind of negative spiral of thinking that we can sometimes get caught into. Well, when they say that your first loss is your best loss, and to just cut off there, it just makes it so much uh, like less harmful than trying to play it out this way. Because as soon as you cut the loss, then you could start the healing process and move on to the next winning trade.
Yeah, I think we've all done that before, when we've had a gap down against us, and then it's, and we've gone, oh, do I really want to get out now, especially as it keeps going down? But yeah, it's always the right answer, just to get it out.
Yeah. Yeah, and well, one of the things too to get out of a situation like that, or to help prevent the negative mindset too. I think we talk about this inside the program quite a bit, and it's knowing your stats. I think it is so important. So like if you know your stats, you're looking at your system from a 10,000-foot view. And even with a trade like this that goes against you 25%, you could still come back from that. And if you have that global view that like, yeah, like this sucks, but it's one trade out of 100 trades this year, or 200 trades this year, like this shouldn't end up making that big of a dent, right? Just like how if you have a trade that moves up like and gives you 4 or 5 R, like that's fantastic too, and we want to compound those, but just one of them isn't going to make your entire year either.
Yeah, I mean, it shouldn't make that much of a dent if that's a setup that you consistently take. If you just taking a setup like, because I mean, I don't see a setup there at all, but if you were just looking to take advantage of because you read a bit of news or something like that, or it's not a setup you would normally have taken because it didn't meet all your criteria or whatever, then if you keep doing things like that, then it will hurt you again.
Yeah, well, I like
Because
that.
you'll keep getting caught out with those things.
Like talking about like open trades, like I'm trying to think of like maybe like we need like a different way kind of format for this, because it's so timely with how the market is moving right now. And like we've got, and let me take I draw so much on my charts, it looks all like I've got a billion things on here, but it's really just a function of price, volume, few moving averages. But when you have the market, and this is the S&P 500, and you rally for, well, what is this, 1 2 3 4 5 6 days in a row, and from the low it's rallied what, the 9%. Like that, this is an index, it's not a stock. And this is the kind of action where it could trigger a lot of fear of missing out.
Yeah.
And if the trade isn't quite there, you might take a look at this and see other things and start to say, "Oh, you know what? Like it's close enough. Let me put it on." Uh, this is the type of market and it's always the case. It's always the case. The type it sit on your hands unless if there's your setup has presented, and it's presented well. One of the things that we finished this study and presented this to members a few weeks back. Going back and looking through all of 21 and seeing like, well, what were the best trades of that year, and what were the common factors? For me, one of the common factors was that it had a gauntlet score of over 7. Now, most of you don't know what that even means. Like, oh, well, what is a gauntlet? I have this tool that I cooked up called the Trade Gauntlet, and it's basically a weighted average checklist of all the things that I'm interested in a trade. And so, whenever I'm very interested in a trade, what I'll do is I'll run it through this gauntlet, and I want to see, well, how much does it match up to my ideal trade? And what I found was when I had 7 or better, that like every single trade that was the performed the best last year was over a 7. So that's something that, well, whenever I'm going to take a trade this year, especially in this kind of unforgiving environment, I want it to have that quality. And if it doesn't, then I'm not taking it. But the idea is that we're like, well, we want to focus on quality, and not take a trade just because the market happens to be moving, or because we think that we could make a quick buck or two. Well, whenever I've taken trades because I think I could make a quick buck or two, like maybe I make a quick buck or two, but I often end up giving that quick buck or two right back soon enough. Um, well, what else did you have open, Stu? You had land, I think, right?
Land is the other one I've got open. I've been in this one for 1, 2, 3, 4, 2 weeks now. Yeah.
Yeah, since back here, right?
Yeah. So I'm just riding that one up, basically. Moved my stop up to $34 now, my backstop. But other than that, I've just kind of sat through this little sideways kind of motion.
So the backstop is right about here, like right. If it's at 34, let's actual.
Yeah,
So
34.
and I'll let's make this a bit brighter so people could see it. So if is there any other danger signals that might get you out? Like, so on PayPal, you were talking about the 10 EMA. Would the 10 EMA get you out on this one as well?
Yeah, that's my trailing stop. So if I get a close below a 10 period moving average, I will put my stop basically underneath the low of that bar. So, if tonight, for instance, it plummeted down and closed underneath the 10 period moving average, I would then put my stop 1 or 2 cents below the low of today's bar.
So
And then
like if
if
you
it
got,
keeps going down tomorrow, then I'm out. If it recovers and goes back up, I'm still in it. And that's how I exit my swing trades, basically.
so if we get a bar like this and it pushes below the 10 period
Yeah,
and it closes up here, then your stop is down here.
yeah.
What if it closes below the 10 period and it's
No, that's it. Well, sorry, that's what I mean, Mike. Yeah, if it just pierces it, I'm not setting moving stops or anything like that. But if it closes below, then that's my stop loss is now sitting right tight under that bar.
got it?
And if the next day it recovers and goes on its merry way, which probably 60 or 70% of them do in the first instance. The
Mhm.
first time it happens, they normally keep going up for another week or two. And then the next time it happens, then you're normally out. But it works for me. It's maybe not super scientific or whatever, but that's kind of my exit rule. So the only two ways I'll exit is a backstop or through that 10 EMA. Yeah.
Yeah,
But
and at
it's
this
it's
point,
that confirmed break of that,
so at this point, you're up about 14% on the trade, or about
Yeah,
what looks like about five, almost 5.5 hour.
something like that. Yeah.
Yeah, see, you just that. So if we're just playing a game here, where we lose the one coin if we lose, but if we win, we could get two, three, four, five in this case, then you don't need to be winning all that much. You just need to continuously play the game. And when you get a winner like this, then if you've got a 50-50 batting average, well, which we're pretty close to, like this is what lets you have like a 75% annual return.
Yeah. And it's, and having a system that keeps you in as long as is possible without, you know, sweating over every minute detail. Just give it every possible chance to go up, which is what I do. Um, you know, that 5.5 hour might turn into 25 hour. Yeah.
Mm.
And that's the stuff that grows your account. Well, certainly the stuff that grows my account. You get those big 20, 25 hour plus winners.
Yeah. And so aside from land and PayPal, what else are you seeing?
Not very much. I had one alert triggered today, and only one that, and I haven't really had a good look at it, and that's RPD.
RPD?
Yep, RPD.
Rapid 7?
Yep,
Okay.
and it's just clicked through a long-term resistance. It just pierced it today, and it's sitting at the 200 period MA. So I'll watch that. I think it looks good if it just a couple of days above the 200 period moving average, and
Hmm.
then I'll look to maybe see what we can do around that. But it's printing some higher lows now, which I quite like. So yeah,
Yeah,
you
that's
know me, I'm kind of old school, just price action guy, Mike. So it's higher lows, higher highs. That's the telltale signal. Then you get interested, you know. And then you look for it moving around the averages. And yeah.
yeah. Same here. I'm from the same school you are. O'Neill, Minervini, David Ryan, um, Van Tharp, all those kind of guys. And this is basically what it is. Like I'm not.
Yeah.
You're even a bit more advanced than I am. I'm not even using candlesticks. I'm using these like
Yeah.
one bar, one strike. Not even. I'm not even looking at the open really. Like I'm just high, low, close. That's it. That's what worked for O'Neill. So that's what works for me. Um, every once in a while, I'll take a look at candlesticks, but it's mostly when somebody else mentions it.
Yeah, but it,
Um,
it, it, it looks as though it could be um, recovering quite well, and it's one of the ones that's quickest to recover in terms of that technology sector. So I'm kind of
mm,
interested in it. But that's the only one that in the last 2 days that's even what any one of my alerts has triggered. So
hmm. All right. I've got a few trades here too. Well, while I'm bringing up my trades, if anybody has any trades that you'd like us to take a look at, go ahead, type them into the chat. Give you a moment to do that. Um, I have five trades total on right now. I've got four stocks and I've got a crypto trade. So this one here, MATX, started this one back here as it just hit my entry. Right, it gapped above uh, my intended entry at 109.60, and I always like to uh, use what's called a buy stop limit order. So when price crosses above X, the order gets triggered, but I only want to buy up to a certain price. So that way, if it's a crazy breakaway gap, it's not messing up uh, my position size too badly, and my risk and everything else involved. So was able to get in here and have just been riding it out. Like this stock so far has done exactly what you would want a stock to do. On day one, it hit the first and the second scale out, and since then, it's just walked up the 5 EMA. Hasn't really issued too many danger signals along the way. Then earlier, earlier this week, started a position in RS. Actually, this was started. Well, what's today? Today's Tuesday. Yeah, no, I started it here and held it over the weekend, and now it's in profit. It hasn't really moved too much yet. Just sitting with it. Ended up raising my backstop on this one from uh, down here below this level that also coincided with some resistance from back here, and moved the stop up to this little shelf area. And I'll take some of the annotations off. So this shelf area, that it coincides with the 21-day moving average. So it took a little bit of risk off there. United Healthcare too. United Healthcare broke out back here, and it's continued to move up. And what I noticed on this, and it actually moved my stop up to break even to choke off this trade, because what I had noticed is that uh, for each day since back here, it's made both a higher high and more importantly, a higher low each day. And it's walked up this trend line here in succession in doing that. So if it breaks that and starts to move back down, then I would anticipate that it would at least touch the 21. And it's because it hasn't really gotten moving yet. I don't feel comfortable giving it space, and it I feel like it hasn't acted properly. Like it hasn't acted in such a way where I feel comfortable giving it more room. Like it hasn't done anything wrong per se, but this kind of frozen rope pattern, just straight up like this, like concerns me a little bit. I don't know. Well, what do you think about this, Stu? Am I overthinking this, or what?
But well, it's pretty slow moving stock, isn't it? It's I can see why you'd want to just cut and run. Probably, yeah, it was only moved 8% in 11 days or something, so it's not. No. It could be next Christmas by the time you get your first scale out. So.
Hey, yeah, exactly. The last thing that we are really looking for here is to sit in a slow and pokey kind of thing here. And yeah, going into it, like kind of know that it's slow and pokey. The daily range is only about 2%, 2.5%. Um, the entire What got me interested in this in the first place was the entire group setting up, like seeing like this and Anthem and CNC and you know, 3 or 4 others, all setting up together, all getting ready to break out together. And at the time this was a leader, or like the leaders were flip-flopping between each other. And something else that has me on high alert and raising my stop to break even was this down here. This relative strength line. The relative strength line is declining over the past 7 days, and that's even with the price action moving higher here. So, um, yeah, I'd rather cut it if it comes back to break even versus giving it even more time.
Yeah.
Then finally, This is a trade that I put on today in AMPH. This is one that I saw this as a potential power play setup where it had this move from down here, quick run up about 65, 64, 65% from the low to the high in about 7 weeks. Very strong move after earnings, followed through, tightened up on progressively lower volume over here. And while it hasn't, it attempted to break out earlier today, and right now it's below my buy point, so it's squatting a little bit. Well, what really caught my attention was the 30-minute chart, and I'll show you why. So there's a pattern that that Mark wrote a whole book about. Well, not all about the pattern, but he emphasized it quite a bit. It's this VCP pattern, volatility contraction pattern. And so it had it intraday. So you have this is one contraction, this is a second contraction, this is a third contraction. And it seems like it's even on its way to making a fourth contraction right over here. And so seeing that within this power play move and with the volume spikes all headed in the right direction here, like even this bar, even like it reversed and came off, that volume started to taper here and volume started to come back in as price moved higher. It's something that got me interested, and one of the reasons why I decided to give this one a shot here. And you might notice a couple of other lines on this, namely this red dotted line and my stop loss down here. So this one I position size and set a hard stop below this low over here. But if price were to have a weak close below the red dotted line, I would cut the trade there because it would have started to break down from that VCP, and if it's closing below that line, then it broke that thesis. Stu, well, what do you think about that?
That seems like a solid idea, Mike. Yeah.
All right. And if you ever don't, well, like, don't feel worried about disagreeing or saying like, well, what the hell are you looking at here? Like,
I can see why you're trading it. It's not what I would take. I don't buy them that extended, but I can see perfectly why you'd want to do it. Yeah.
mm-hmm. Yeah, the idea with me and the idea in the program too is that like we're all trying to get better here. And I like as long as I've been trading now, like I've been trading for over 20 years, there's still plenty more to learn, to improve, continuously get better. And part of this game too is like there is no ceiling. It's one of the reasons why I enjoy it so much. See a
Absolutely.
couple of questions coming in too. 007 of Wall Street. Breakout is a spy breaking out. Take a look at the spy. Break out here or die. Well, let's take a look. Didn't mean to draw that line. Let's get rid of that. I think that it's already broken out. Like I would say that the breakout started much earlier. And like if we're drawing trend lines, you have a multiple touch here. 1, 2, and then yeah, starting from here, 1, 2, 3. Arguably fourth down here, it starts to break out, and like down here is where it made the turn, and right there is where you had your follow through day. Follow through day is this thing that O'Neill came up with and taught. And basically, well, after you have a down day like this on an index where the market stops going down, reverses, and closes higher, then you count 4 days after this. So this counts as 1, 2, 3, 4. And then you would start to look for a follow through day. And the follow through day is an up day of 1.2% or greater on heavier volume. The idea is that as the market's following through, that it's showing increased demand from the institutions of the world, and so you would start to see continued buying. So that happened down here, and at this point, you're already back above the 200-day moving average. You rallied for how many days in a row here? I don't know, Stu. What do you think?
Yeah, I think in the short term it has broken out. I saw it as being, when would that be? Thursday would have been the, no, in fact, Friday. It kind of broke the last minor uh, resistance, really. So, yeah, I think it's probably going to go up a couple more days, and then it needs to come back and retest the 200 though for it to stick, in my view.
Yeah, your price is back above all the moving averages, short term, long term, intermediate term. Um, it, this stage, it almost seems like the market is climbing the proverbial wall of worry, where people hate this market. It has every reason to fall, right? You still have a war to deal with. We still have uh, inflation and rate increases and all these things. It seems like the kind of market to rally in everybody's face.
Yeah,
So
yeah.
yeah, don't trade the headlines, or read what the market is doing, rather than what people are saying. Like if the setups are there, then it's our job to take them. And I realize that that might sound like foreign to you if you don't know what it is that we're talking about. So basically, like, yeah, like if you have a system, if you have setups, like a way of looking at the market, and if the market is presenting its opportunity to you, like the specific thing that you're looking for, then great. And if provided that you have an edge with this, then all you have to do is just take that trade, because it goes back to the whole coin flipping analogy from earlier. You flip a coin, and if it lands on heads, you're getting paid $2. If it lands on tails, you're losing $1. That's what you want to try to build for yourself. And then you don't need to be right all the time. You could be wrong 50% of the time, and it's okay, because over that long term, you just keep on turning over that edge, and that's how you end up winning and making money in this game. Let's see. We're already about 10 minutes over. Stu, I don't know how you're looking on your end. Um,
Okay, for another five or so. Yeah. Okay.
All right, then. If anybody else has questions that you want to get in, let's go straight into the Q&A and answer another question or two if we can. We're waiting for uh, another question to come in. If you're not already on the newsletter, go check out the newsletter, marwealth.com/newsletter. It's a free newsletter, sending it out once a week on the weekend. Uh, sharing education, ideas, upcoming events, upcoming earnings, all these things. It's fantastic. Go check out the newsletter. So what else can we share while waiting for a question to come in? Any ideas developing on your side? Well, what's the sit on your hand scan say?
One I tried yesterday that I was obviously a day early on was plug.
Mm.
So I tried that yesterday and got stopped out. But it broke through today and it's stuck. So hey, one of those things. So I'm just playing that little edge, yeah.
Mm-hmm.
But I bought it. I bought it in the morning. After the first 15-minute candle, I think, and then my stop was maybe just a bit too tight, but it was where I wanted it to be. So anyway, about 2 hours later, it had a bit of a sell off midday, stopped me out, and then just proceeded to go up. So it'll probably go all the way up to $100 now. But anyway, that's just that's the way these things happen sometimes.
Yeah. So you're certainly not alone there. So yeah, tell us that. Like how do you manage the emotions well when you see that? Like, what's the self talk?
That's like I'll catch it next time. But what I will be doing is looking for the old second mouse setup here. So for those readers that or viewers have probably never heard that expression, but it's the old one that the second mouse gets the cheese. So I'll watch it to go up and see if it pulls back to that level that it just broke out from. And at that point, then I would look at the classic pullback buy. So that's the kind of self-talk, if you like, Mike. So just goes on the pullback watch list, and I just watch to see if it does that in a week's time or so.
Yeah, that's great. It's just so it sounds like it's just okay. This happened. On to the next thing and find the next opportunity.
Yeah, I mean, you can't catch them all. In fact, you're never going to, like Pokemon, as I've said before. You're just never going to catch them all. So yeah, it goes. So hey, yes.
Pokemon, haven't heard of that in a while.
Yeah,
They're busy seeing what is it, like a Bored Ape NFTs thing they're talking about now?
I haven't seen that one. No.
Yeah,
But yeah, I mean that whole sector's doing well, obviously with the the EVs and all that kind of stuff. Obviously with the price of fuel going up, so it seems to be doing quite well. There's a few others like Sedge, SEDG, and a few other in that kind of sphere. They're all very similar charts, all doing quite well.
Yeah, this one I probably need to clean this up a bit. But yeah, this I don't know about this section here. Like it just seems so erratic.
Yeah. It's the kind of Darvis box type thing, isn't it? Really, you draw a box around it. If it breaks the top, then you can buy it.
It certainly has that line in the sand right there.
Yeah,
it'd be an area of interest. But this is kind of wide. So if we needed to place a stop somewhere to break the low of the box, 14%. It's a bit wide for my taste.
There's no real setup there at the moment, and it's not a breakout trade market. So. But it's worth keeping an eye on that sector. I think it's a strong sector.
Yeah, I agree. All right, so guess we'll wrap things up here. Stu, it's always a pleasure.
No,
it's always a pleasure. Whenever I talk to you, I always learn something.
Yeah, it's always good to chat, isn't it? Same here. I mean, I always learn stuff and pick up ideas from places. That was good.
All right. Well, I'll see you here again next week. Thank you, everybody, and have a great rest of your week. Take care. Much love.
Bye, everybody.
Peace out.
Bye.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Marrow Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.